Hey, welcome back. Today we're going to take a look at, can you borrow the down payment money to buy an investment property? So again, if you're into real estate investing and you want to grow your portfolio, sooner or later you're probably going to run out of cash for down payments to buy more properties. You're going to have to look at, how can I borrow the money for the down payment? How can I borrow the money for the renovation, the closing costs, all that kind of stuff? That's what we're going to be talking about here today. So the first option I would look at if you're looking to borrow the down payment for purchasing an investment property is, can you get a personal loan from somebody that you know to do that deal? Okay, so this could be a parent, could be a sibling, could be a good friend. How can you borrow that money from them at a reasonable price without having to jump through the hoops of qualifying for a traditional loan with a bank or something like that? So typically when I've seen this happen is, if you're borrowing money from a family member or a friend, perhaps you're going to be doing a promissory note. So they're not going to be registered on title in the property. They're not going to be a joint venture partner on the property. They're just going to loan you the money with an IOU. A little bit more formal than that. It's a promissory note, but bottom line is, it really is just an IOU. There's nothing backing that up. So obviously a lot is going to rely on the relationship you have with that person, how much they like you, how much they trust you with their money, how confident they are that you're going to pay them back. So again, typically this is something that you might do with a close family member or a friend. Another option you might look at if you're a homeowner yourself, or if you have a number of properties, is, can you pull some of the equity out of your home or out of one of your rental properties via a home equity line of credit? That's a great way for you to access some of the equity that's in your property and use it as needed. So again, the way the home equity loans work is they're kind of a revolving line of credit. It's placed on your property, it's based on the value of your property, and you only pay for it if you use it. So it's a really good way to access money very, very quickly. However, you have to look at, how much is that money going to cost you, and how are you going to be paying for that? That's going to increase your monthly payments for your mortgage payments by the amount of that home equity loan as well. So keep that in consideration when you're doing a home equity line of credit. Something else you might look at is dipping into your IRA, your individual retirement account. So if you're in the States, that might be a 401k or a Roth. In Canada, that's your RRSPs. And typically this can be very, very expensive if you're pulling that money out to buy an investment property. Typically the way that the government allows you to do this without penalizing you is if you're purchasing your own primary residence. And up here in Canada, at least, it's usually only available for first-time homeowners. So that might be an option. However, it could be an expensive option and could involve some penalties if you're doing that as well. So make sure that you check that out. Another option for borrowing money for a down payment for a property is working with a private lender. What's a private lender? Well, it's kind of like the mom and pop situation I was talking about there with getting a personal loan. It's typically somebody that you know already, that you have a pre-existing relationship with, and they're going to loan you the money. However, in this case, they're probably going to want security on that loan in the way of more than just a promissory note. So the way I've most typically seen this happen is, you get a private lender on after the fact. They kind of act like a HELOC in a way, in that they put a second mortgage on the property that you've purchased. So maybe you can get them to loan you the money up front, put them on as a second mortgage after the fact, or if you can come up with the money in the first place, you bring them on after the fact and you pull out your equity and you put their money in as a second mortgage. But bottom line is, they're going to be looking for security on that property. So the big advantage is, if you're working with a private lender that you know personally, chances are you can go up to 100% loan to value for that loan. If you're working with a more of a professional private lender, they may only go up to 70, 80, maybe 90% loan to value, but that money tends to be a lot more expensive. And last but not least, when it comes to borrowing the money for a down payment for a property, you could look at working with a joint venture partner. And instead of borrowing the money, what you're doing is you're getting them to partner with you on the deal and put in the money. So they put in all the money, perhaps even qualify for the financing for the property, and you share in the ownership and the profits of that property. This is a wonderful way to get started with really growing your portfolio And it really opens up the whole spectrum of what's available once you have pretty much unlimited access to cash. Once you really crack the code on this, you can do one after another of these kind of joint venture deals. It's a win for you because you're able to keep going with your portfolio, keep growing, keep creating value long-term for yourself and your investor partners. And it's a big win for your joint venture partner too, because they're able to get involved in real estate investing without having to be the super active partner. Sure, they're partners with you on the deal, but they don't have to be finding the deal, managing the deal, doing any of that kind of stuff. That's your job. They bring in the money, you bring in the expertise, and you share in the profits. This is what I did back in the day when I was doing rent-to-own deals. I did about a dozen of these deals where I would buy a single-family home with a joint venture partner, and then we would do a rent-to-own deal with that with a tenant buyer. So my joint venture partner came on board with the cash for the down payment and the qualifying for the mortgage. I brought the deal and the tenant and the management to the table, and we shared in the profits and the risks on those kind of deals. So it's a great way to grow beyond what you can do by yourself. All right, speaking of joint venture partners, if you're looking to find some, I've got the solution for you. It's my book, Money Partner Formula. It's an entire process for attracting joint venture partners and investors to you instead of chasing after them. You can get a free copy in exchange for your name and your email address. Just click on the link in the description below or go to investorattractionbook.com. Go ahead, get your copy today.